business. Another thing that we want to talk about here now is control activity. Control activity, which we can equally term controls or internal control. Basically, control activity could be electronic, could be financial, could be physical. So control activity, simply put, are efforts, procedures, processes that managers or management as a whole put in place to safeguard assets, to maximize our profitability, and to minimize fraud and easy and earlier detection of fraud. That is control activity. So control activity actually belongs to the manager or the management to put control in place. And control activity could be in form of, I talk about physical. Let's say we put padlock, lock and key, to access or deny access to a particular place. That is a control activity. So it helps ensure that management directives are carried out. Only people that need access to that particular place will have it. So it could be electronic. Maybe we have to log in. Maybe there's a thumb printing electronic that we need to clock in, to clock out, and the like. Those are control activities. But now is a type of electronic. So it could be physical, it could be physical, it could be electronic. But those are generally control activity. Who has responsibility for control, to put control activities in place? I'd mentioned it belongs to management, not the auditor. Control environment. Having spoken about control activity, control environment now is an attitude. Actually, when we're talking about control environment, is the totality of both the control environment, the control activities put in place, and the attitude of management towards anything control put in place by the organization. So it includes governance, it includes management function, it includes attitude, it includes awareness, it includes action of those charged with responsibility to govern the organization, to manage the organization, as it concerns internal control, as it concerns the importance of control to an entity. So therefore, if management style could be perceived to be lackadaisical, then we can say that the control environment is weak. But if at the slightest inclination of a manager thoroughly try to know all that has happened, then we can say the attitude of the management towards governance, towards control is very strong. Therefore, control environment is strong. So we can conclude that to the extent to which the organization's managers and management as a whole takes seriously control put in place, or controls put in place, to that extent is control environment going to be strong or is going to be weak. That is control environment. Control risk, therefore, having said that control activity, internal control belongs to managers and management as a responsibility or as responsibilities, then therefore control risk is the risk that is the inability of the control procedures, control processes, control activity, management attitude to controls put in place can, to the extent that it can not debar what actually it existed for. For example, a door has a lock. The function of it is the objective of putting that door under lock and key is to deny access or give access to authorized users or those that need to have access into that space. But now, if for any reason an authorized person enters into that space, maybe a room or a workplace, then and the lock could not deny him or her access, the keys could not deny him or her access, then we will be talking about control risk. So a control risk has taken place. A control risk has taken place. So a control risk is the risk that the mitigants, processes we've put in place, could not achieve desired aim and results. That is what we are talking about when we are talking about control risk. We've spoken